What's happening, guys? It's the Stock Guru, the coolest stock trader on YouTube, and I got a special video for you guys today. I'm going to be talking about my favorite day trading pattern. Now, this is a pattern that happens like every single day on different stocks. Um, this pattern kind of has like a lot of different names. Some people call it the ABCD pattern. Some people call it buying the pullback. Others call it just an uptrend, right? But it's something that I've found happens a lot on different stocks, and there's some good opportunity in it. So I thought I'd share it with you guys today. So jumping right into it, we got this pattern happened on UWT today, the ETF for crude oil. So pre-market, I noticed this big spike, this big jump, and that's like the first sign of this pattern. Okay, so basically what this pattern is a move up, a pullback, and then moving into higher highs. So that's like, to keep it super simple, what it is. Um, some people will call it the ABCD pattern because you can consider this like the A point, then it moves up to the B point, then down to the C point, and then up to the D point. And people will call this range right here the B point. So yeah, it spikes out here at B, and then over here, when it breaks the new high day, this is breaking the B point. So I don't really call it that. I'd kind of just notice the pattern, and I'll use a Fibonacci retracement tool sometimes to identify it. But either way, no matter how you look at it, this can be a very profitable pattern. So let me show you exactly how it works. So we see this spike on UWT. So I'm waiting for it. I'm waiting to see if this pattern plays out. And it might not. And later on in the video, I'm going to go over some trades where it doesn't happen, or some patterns where it doesn't happen. But this one, it is fulfilled. So let's get into it. So we have the base of the move right here. And we'll take the retracement tool up to the very top of the move here, right? Now what this does is it measures the move into lines, and we're going to be focusing on the 50% mark, the 50% mark being the middle line right here, and what that represents is half of this big move here. So when the stock begins to pull back here, we're waiting for it to basically come to this 50% line and see what happens here. So we want it to find some support there and then start trending back up. So as you can see here, it finds some support here, dips below it for a second, which is no big deal, comes back up, still finding support, and then we see it begin to uptrend. Then we see it begin to start coming back up and starting to recover, and then that's when you say, okay, the pattern's probably going to fulfill itself here. So it's going to keep on going. You're going to see what ends up happening here, but a good entry point would be basically this micro pullback right here, this little 1 minute candlestick, where it kind of pulls back and it confirms the move up. So, I mean, if you were to buy in here and sell at the high of the day, that's over 1% right there. So that's not a bad trade. Like, what I like to say is 1% in a day keeps the jobs away. But even if you could trade this a couple different ways. You could enter here. If you're a little bit more risky, you could enter at the support when it first finds it. But the thing is with this, it could easily break below and the pattern not be valid. And then a lot of people also trade the high of the day. So break in when it breaks above this previous high of day and ride it up, which is going to offer you another about 1% here. But I wanted to show that this doesn't just happen on, like, this isn't just a one case scenario. So I'm going to go to a blue chip company. Everybody knows about it. Apple. The same exact pattern happened on Apple today. Okay? Check it out, guys. So same pattern. The up, pull back to the 50% range, and then break a new highs. So let's pull out the Fibonacci for this one. I'm probably not going to keep it up, but just so you can see the measurement of the move. So we're going to start it here. I don't know where people like to really start it. Some people, I think, might start it down here. Personally, I do it like when the move kind of begins. And we're going to take it to the high here. Okay, perfect. So as you can see here, we have this big spike up, and then it retraces back to this 50% mark, right? It finds the support here. It begins to come back up. I'm going to delete this now because you don't really need it for the rest. But basically, we have this big move up, and then it... Hold on one second. Somebody just came into my house. But anyway, we have this big move up, and sorry about that, guys. A little distracted. But we have this big move up, and then we find some support here. And then it's able to consolidate here and then start coming back up. Here's the micro pullback where I probably would have bought in, but you can pretty much get in anywhere and ride this baby up to the break of new highs. Now, this is Apple, so you're not going to get as good of a percentage trading this, but the point is here that we have the same pattern. So I'm going to go back to crude oil for a second here and show how this pattern might not always work. or sometimes it doesn't, just the pattern is invalid. Okay, so later on today, we had a delayed news report for crude oil, and it came out on Thursday at 11 o'clock, which it usually comes out on Wednesday at 10:30. But we have this big jump up. So let's pull out our retracement for this. And we take it here, and we ride it all the way up. Okay. So as you can see here, this move looks like it's going to happen again. It comes down, finds some support at that 50% range, starts trending back up. But what happens here is it gets rejected at the high day. It actually doesn't even get to the high day. It tries to retest it, and it gets stopped at like 1321 or something like that. 1322, and the high day was 1324. So this can easily happen. It comes in, tests the high, and then gets rejected. So that's why I like to trade when I see that it has a valid support. I like to get in before the high of the day and sell at the high of the day. Oops, I thought I got rid of this retracement. So if you were able to do that, you might be able to, let's say you get in something like here, you're going to be able to ride that up and get about a little bit over 1%, which isn't bad. But see, if you were trying to buy at the break of the high of the day, it might not work out for you. So this is just an example of this pattern not really fulfilling itself. And then I have another one here where it doesn't actually fulfill itself all the way. We have AMD, another well-known stock. We have this big spike up in the morning here, and then it begins to retrace, right? But as you can see, it does not find any support anywhere near the halfway of this spike here. It totally tumbles right back down from the jump. So you can see this is just, the pattern wasn't valid here. There was no ABCD pattern, if you want to call it that. It just didn't happen here. So that's why you have to wait for the indicators to show that this pattern is actually valid if you're going to be trying to trade it. But I'd like to show you something interesting here. If you take a look on the short side, we had this massive drop down, right? So retracements can work, this pattern can work both ways. So let's take it from here down to the low. And what you can see here is it actually has a reversed retracement, an inverse pattern, right? The pattern that I'm talking about just does the opposite here, where it has this big drop down, and then it retraces. It doesn't find support at the 50% mark, but it does at the 61.8% mark, which is still perfectly okay. And then it starts to come back down, and the downtrend continues. So at this point, you can say, okay, instead of the uptrend continuing on the regular pattern, since this is a downward one, you say, oh, the downtrend continues. And then it goes, tests this low of day, gets rejected a little bit. It's almost like a reversed cup and handle. That's another name that people will call this pattern, is the cup and handle. I don't know. I don't really call it anything. But yeah, it has this, comes down to the low day, and then it breaks down. So it's basically like the opposite of the pattern here. It's the same pattern, just reversed. And then finally, let's do one more that didn't work out here. It's natural gas. So natural gas had the storage report today. Came out at 10:30. What natural gas? What am I doing? It's forward/NG. This is not the natural gas ETF. So let's go to UGAS, which is the ETF for natural gas. I was like, why don't I see the report come out? So we see this big drop here. So actually, you might look better on the future here. Give it a second. Okay, so at 10:30 we have this big drop. So let's go over to DGAS, the inverse ETF for natural gas, so that it is so we can analyze this pattern and see if it's going to work out for us here. Okay, so we have the big spike here. So let's take a look at it. Let me zoom in a bit more and break out the retracement tool. We have this big spike here, and it goes up to the high day. Now this pattern does not work out in this case. Okay, guys, so here's what it is. We have the spike, and then we have the pullback, and we do find some support at 50%, right? And then we start to trend back up. And like, you could buy in here and sell at the high of the day, but the pattern that I'm talking about here is usually it should continue the uptrend past the high of the day. You can make money trading this all different types of ways, but I'm just going over like the actual pattern that I'm talking about here, where it should be breaking the high of the day. So anyway, we have this big spike up, and then it finds the support at this halfway of at this 50% mark, right? And then it starts to uptrend again, and it gets rejected by the high of day, and then it begins to fall. And then it comes back to this 50% mark, finds some support for a second, and then breaks below it. And then it becomes a resistance, right? Which is not what you want to see, and then you can see it totally sell off. Now, you can kind of use this to your advantage here and say, okay, well, at around 11:30, I can tell that it's a downtrend on DGAS, which means it's going to be an uptrend on UGAS. So you come here at like, what is it? Was it 11:30? I can't remember what time I said. I think it was 11:30, right? And now you see this big spike up. So you could trade it a million different ways, but today I really just want to get that pattern out there for you guys. It's my favorite day trading pattern. I find it to be very consistent. You just have to make sure that the pattern's actually valid and it's hitting all the points. It's actually doing what it's supposed to. So just real quick before we end the video, I'll give you a quick little recap, right? You want to see an uptrend, a big spike up, a pullback to about halfway, and then it began to recover, right? That's the pattern here. It's pretty good for day trading. You're going to see it all the time now that you've seen this video. You're going to start to notice it. And this is one of my favorite patterns to trade when it comes to day trading. It's pretty much the only day trading pattern that I use. So guys, I really hope this video helps somebody out. If you guys liked it, please drop it a like. It shows me that these videos are helping you guys. If you guys enjoy the videos, please subscribe so I can keep making more. And yeah, if you guys want to check out like my journey, I have an Instagram, the Stock Guru, TH3 Stock Guru is how it's spelled. So if you want to check that out, I post my trades there, and I post a bunch of stuff there. So yeah, I'm gonna be making more videos in the future, guys. So I hope you guys enjoyed this one, and I'm out.